Hi everyone, hope you had a great weekend, and let's cover my Elliott wave scenarios on Bitcoin and explain why the probabilities are higher to look for a bit of a move towards the upside towards that 86k area of resistance. I will cover multiple scenarios in this video, but as you will see, the outcome and the expected movement of price is relatively similar between these scenarios. Starting with the first scenario, where we have a 5-wave finished impulsive structure to the downside labeled as a wave A. Look for a 3-wave corrective structure to the upside in a wave B, which can be any corrective structure, and then we want to see a wave C to the downside to take out the low of your wave A. The common retracement target for wave B is the 0.5 to the 0.786 Fibonacci taken from the start to the end of wave A, giving you a target between 85.2 and 87.2k. If we then go to the second scenario, then here we do look for one more low to finish a 5-wave impulse. So 1, 2, 3, 4, 5. It kind of depends on how you count these subwaves. You can see the detail here on my chart, but by all means, you just look for one more low, touch the support at 80k, and then aim for a bounce to the upside. Important resistance for wave 4 is the wave 4 price action of a lower degree. In this scenario, inside the yellow wave 3, we have the green subdegree count 1, 2, 3, 4, 5, which makes this price action here important resistance for our yellow wave 4, sitting between 83.5 and 84.5k, which as you can see was almost touched. Now, from a pure Fibonacci perspective, the target area has already been touched. 0.236 to the 0.5 is the common retracement target area for wave 4, 83k to 84.6k. The invalidation for wave 4 is 85.3k. After these 5 waves, you look again for a 3-wave corrective structure to the upside and another move down to take out this low. Then we get to the third scenario, and this at the moment has a lower probability, but it is important to cover. So here we have an ABC towards the downside, which is a zigzag. Now in this scenario, you could theoretically count this as the low of a corrective structure and look for price to take out the highs here at about 88.8k. In order for this scenario to become a highest probability scenario, you basically need to get an impulse to the upside, a 5-wave structure, followed by a 3-wave corrective move to the downside, which has to be confirmed. Then the next step is that the probabilities are highest to take out this high. Next area of resistance here, as you can see, is this blue box sitting between 87.1 and 87.4k. So of course, we could once again then form a 1, 2, 3, 4, 5, get a 3-wave corrective structure again necessary to increase probabilities to then take out this high. And above this high, there is not much left, so probabilities are then higher to take out the highs here at 88.8k. But we have a lot of work to be done, as you can see. And also, an ABC to the downside can lead to a bigger corrective structure like a WXY double zigzag, for example, or a triangle or other structures. So we got to give it time, but by all means, after your wave C, you do look for price to move towards the upside. The reason why we at least have to consider a potential 3-wave structure to the downside, even though the subwaves here do count a bit more impulsive compared to it being a 3-wave structure, is because of this scenario when we zoom out. So when we zoom out, 1, 2, 3, 4, 5 finished as a wave 1 or A is a bullish leading diagonal, then we look for a 3-wave corrective move down inside preferably the most common target area for 2 or B, which is this blue box, the 0.5 to the 0.786 fib taken from the low to the high, which is where we are now. And also preferably wave 2 or B ends at least after the 0.382. And you can see this low was made after the 0.382. Again, it doesn't yet have the highest probabilities. I just want to make you aware. And more locally, you do look for some similar price action, which is a bounce to the upside. And then the most bearish scenario, you always need a bearish scenario where you basically just tank to the downside and you're going to take out these lows over here at 76k. You then need to count this structure over here as a multi 1, 2. So a 1, 2, 1, 2, maybe another 1, 2, and then get your 3, and then eventually 4, 5, 4, 5, 4, 5. You basically create a couple of 4, 5s, get a retracement, and eventually tank to much lower prices. However, what is very tricky in this scenario is the positioning of the wave 2s and also the wave 1. So this wave 1 over here, as explained already when price was forming, it does count better as a 3-wave ABC compared to an impulse. But for the sake of this scenario, let's say this is an impulse to the downside. Then this wave 2 needs to end over here. It needs to end on this high, because else we have a 3-wave structure, which is not possible. We want wave 1 in this case to be a 5-wave structure. So wave 2 needs to end over here, which then means this has to be a WXY. So a zigzag X and then a wave Y. Now, there is a way to count this on the sub-degree levels, on the lower time frames, but that goes too deep for this scenario. So, okay, right, we can put a wave 2 there, it's fine. Then we have an impulse down. Now, this wave 2 is where things get tricky. And the reason is that you can see a 3-wave move up. Perfect. That's what you like to see for a wave 2. But if this is another 1, we need a 5-wave structure here. But you can see how 3-wavy this looks, right? Preferably, you would have seen 1, 2, 3, 4, 5 towards the downside. And you can also see that the highest amount of volume in this move sits in the low, which is more common in an impulse for a wave 3. So you wanted to see another 4 and another 5, which we didn't get. Which therefore means if we want to end wave 2, we preferably do it on the right top over here. Right? Instead of ending 2 here and count this as another wave 1, which is difficult because it looks very 3-wavy and wave 1 needs to be a 5-wave structure, we then need to park wave 2 on this high. But then we are met with some more issues, right? So this is a bit of a deep dive. If you don't really like the in-depth stuff, just go to the next timestamp. But if we end wave 2 here, then you can see that inside wave 2, we took out the low of wave 1, which basically means you can only have 3 scenarios, which is a triangle, A, B, C, D, E, which we surely didn't get. A flat structure, A, B, C. C needs to be a 5-wave structure, which means you need 1, 2, 3 highs, right? Because wave C is a 1, 2, 3, 4, 5-wave structure. 1 high, 2 high, 3 highs, right? That's what you're looking for. However, we only have 2. Or a WXY, which then means W, which is a zigzag structure, X and Y. But this is a sideways WXY, not a double zigzag, which is invalidated because you took the low. And because wave W here is a zigzag, in a sideways WXY, wave Y cannot be a zigzag anymore if wave W is already a zigzag. And therefore, we cannot count this as an ABC structure for a WXY, which therefore means triangle doesn't work, flat doesn't work, and a WXY doesn't work. Makes it very difficult to park wave 2 here, but we also can't really park it there. Lowers the probabilities for this whole scenario, basically, right? So that is the most bearish scenario, adding probabilities to keeping an eye out for signs of strength and, of course, areas of support. We are currently bouncing, by the way, on the point of control at 82K. If I open on my levels over here on my chart, you can see what's up at the different areas before reaching 85, 86K. We do have this daily naked point of control at 84, and below us, we definitely have some interesting resistance. And at some point, I would really like it to hit this area of support. My target boxes tend to be very nicely respected, like we did over here at the high as well. Area of resistance tested once, twice, 3 times, and eventually we got the retracement. So if we do move to the upside, keep an eye on these 2 areas here, and I would definitely like to then come back again towards that 80K, but we follow what price does, no? If we then look at the news, then we do have some news in the upcoming week. Tuesday, Thursday, and Friday times our Central European time zone, so 3 p.m., 3 p.m. and 1:30 p.m. and 4:25 p.m. Some high impact news. Make sure you trade safe as it can increase the volatility on the chart. And if we then look at the probabilities and the polylines, which I showed at the very beginning, the polylines basically summarize the expected price action. These are the highest probability polylines. As the probabilities at the moment are higher, we are looking for a move to the upside. We're looking for a bounce. We don't even have to be incredibly precise with the exact scenario. Elliott waves is about directional bias. And at the moment, that directional bias is towards the upside. Yeah, we can move to the downside, touch the support, but it doesn't matter because the overall bias remains higher for a bit of a move up, create a bit of a bounce as well, except in the most bearish scenario where you do have to count multi-1-2s and you just tank towards the downside. So in other words, before taking out this low, probabilities are higher that you are looking for a bit of a move towards the upside, right? And I do keep an eye on that 80K area of support. Now, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.